Hello, Matt. Welcome to the European Tech Show. How are you doing?
I'm great, Seb. How are you?
Very good, thank you. It is an absolute pleasure to have you. I don't know if you know, but I frequently post about Crowdcube companies. I'm a huge fan of what you and your team have built in the ecosystem. So thank you for joining me.
That's very kind, and yeah, I do know you. You follow a lot of our companies that we've raised capital for and post frequently, and for that I thank you.
No, my pleasure. So look, before we kick off, why don't you just give like a quick 1-minute intro into you and into Crowdcube?
Yeah, so Crowdcube is the largest platform for retail investment into the private markets in the UK and the EU now. I've been with the business for getting on 11 years actually. So from when we were teeny tiny and supporting really early stage businesses with small rounds of funding to today where we're managing about $1.5 billion worth of assets for hundreds of thousands of investors from all over the world.
Yeah, it's amazing. What's changed in that time? It's a long time to be at Crowdcube.
What's changed with the business, I guess, is really acceptance and adoption of this form of fundraising for companies, and acceptance and adoption that access to the private markets for investors is a good thing. And we've kind of, ridden that wave, I guess, with the business over the last decade or so. It's a complex business to build and scale. It's heavily regulated in multiple markets with different regulators. And we follow that kind of venture game of the value we created in 2015, 2016, 2017. The companies we raised with at that point of time is starting to materialize and crystallize now with companies like Revolut and Monzo and some of the other big fintechs delivering really big secondaries for our investors, which is great.
No, and it's been amazing. Yeah, I mean, phenomenal returns to some of the Crowdcube investors. And I wanted to talk about some of those secondaries maybe in a little bit. But how else do you see the sort of the Crowdcube market, the crowdfunding market? How similar do you see that to the VC market? Like, have you seen the trends, kind of the peaks and the troughs mirror the kind of the general tech bubbles that we've seen? 2021, super high valuations and quick commerce was quite popular. Now we see very high valuations of companies like AI type companies. Do you think the crowdfunding kind of ecosystem is more resilient to those kind of hype bubbles, or does it follow a similar trend?
I think, what are we seeing today that we weren't seeing in 2021, which is the same thing that VCs or institutional investors would see. We're seeing companies are being a lot more capital efficient, so they're raising less capital, they're doing more with it. I don't think that changes whether you're running a crowdfunding platform or you're an institutional investor investing in the underlying companies. On the investor side, we're definitely seeing a sort of ever-growing understanding that having some level of exposure to private market investing is a good thing. That might be at the early stage, where for French and UK investors, for instance, tax relief might come into play. There's a great swathe of UK consumers and investors who are now higher rate taxpayers, and that number's going to get bigger. So people are becoming more interested and aware in how to make tax efficient investing work for them. And at the later stage growth end of the market, we're seeing this kind of convergence of private and public, and retail investors understanding that having exposure to really high quality assets at the later stage end of the market is also a good thing. So our job is to make sure that we're the best possible distribution partner for serving those investment opportunities up to them. And I don't think either of those things are crowdfunding specific. I think they apply to the venture market, the angel investing market, and our market.
Yeah, absolutely. And yeah, secondaries and the demand for secondaries is really skyrocketing. We're seeing lots and lots of more companies turn to secondaries as a way to, release equity, return money back to investors or early employees. Do you see a future in which Crowdcube plays a bigger role in facilitating secondaries, but not just for your own portfolio companies, but for other companies as well?
Absolutely is the short answer. So to give you a bit of context, we've now done probably close to 50 million sterling in secondary transactions in the last 18 months.
Wow.
On the buy side, we're seeing retail. Obviously, that's what we do a lot of, high net worth and sophisticated, but also institutional buyers of secondaries on Crowdcube, which is a fascinating development for us. We have the technology, the regulatory permissions, the know-how to run secondary events for companies where the sellers might number in thousands. And there's nobody else who has the capacity or the ability to do that at the moment. The secondaries are becoming more and more popular. We're seeing all of these high profile tender offers, not just in the UK and Europe, but also in the US. So it's an area of our business that we're really focused on. It's an area where we believe we can provide a really great service to companies, whether they're existing Crowdcube portfolio companies, of which we have, well north of 1,000, some of which are really, really large, as you know, but also net new businesses to our ecosystem who are turning to us to work on different liquidity solutions and different liquidity requirements for their business, where one of the buyers could be their customers and our retail investors.
Amazing. So these companies are now coming to you directly to actually run their secondary process, almost independent from your crowdfunding business entirely. Correct.
Yeah. If you're a consumer brand, a late stage consumer brand in the UK or in Europe, indeed, and you've got an audience of customers that would like to become a shareholder in you, historically, we used to do that via the mechanic of a primary trade, but now we can do that via the mechanic of a secondary trade. It actually makes no difference to us. The net result for the company is a massive base of really hyper engaged customers who now have become co-owners in the business, in addition to potentially, a meaningful secondary liquidity event for founders, early shareholders, and or employees.
Interesting. And do you see that type of secondary becoming bigger than your sort of like your primary rounds in the future?
We'd love it to. If you look at some of the regulatory changes which are happening in the UK at the moment, specifically with the introduction of a thing called the public offer platform regime, which hasn't been widely talked about within founder circles to this point in time, but we're trying to change that and really raise awareness of this change in regulation. But it's something we're incredibly bullish about, and I'll give you a kind of real world example. There's Octopus Energy have been in the press quite a bit this week, relating to UK capital market reforms and also the spin out potentially of the tech platform of their business. Using Octopus as an example, they've got 7.5 million active customers. Working with us under this new public offer platform regime, which comes into effect from January 1st, if 2.5% of their active customer base were to become a shareholder in the business while they remained private, they'd do 150 million sterling funding round. That could be primary, that could be secondary, it could be a mix of both. What it would be one line on their cap table, ordinary shares, and delivered in 4 to 6 weeks with no advisors, no bankers involved in the process. And if it's not Octopus Energy, it could be any number of large UK or European consumer brands. And importantly, the regulation applies to both European and UK businesses. So the times are changing in terms of what options are going to be available to really late stage companies who've got really big customer bases to raise capital.
No, that's really cool. For those who don't know about the public offer platform or the POP regime, can you give like a 1-minute brief into what it is, what's changing, and I guess you've spoken to an extent on why it's important, but essentially, what it is and what it means?
Yeah, so POP stands for Public Offer Platform Regime. And what it is doing is it's seeking to change the regulation which is in place as of today, which requires a business to produce a prospectus document to raise more than 8 million euros from retail investors. A prospectus document is a really long, like hundreds of pages listing document that you would produce in order to go public. But there's this cap at the moment that requires businesses to sit under an 8 million euro fundraise in the UK if you're raising from retail investors. That's going to be removed, abolished, taken away. Now, for a company with a sizable audience, take an Octopus Energy or a Revolut or companies with millions of customers, that presents a really interesting opportunity, because it allows those businesses to turn to those customers whilst they're still private and say, look, we'd love to have you on the journey with us as a co-owner and a shareholder, and start to raise really meaningful rounds of funding, because there's no cap. And our technology and our systems and processes enable us to execute on these rounds, whether it's 10,000 investors or 100,000 investors, makes no difference to us.
Amazing. And you said it's going live in January next year. Are you having conversations already with companies that you know are interested?
Yes.
Very cool.
Absolutely. So it's really cool. Those companies are in the UK and in Europe, which is fantastic as well. And it's not going to be right for everybody, but if you're a consumer brand who's got a really big audience and you're a founder that is looking for some form of liquidity, either secondary or primary, over the next 18 months, this should be on your radar.
Interesting. Yeah. I mean, I had Alex Latham from Chip on last week, and we were talking about some of the benefits of getting shares in your own company in the hands of retail investors.
Yep.
And he couldn't, sell it enough. He was saying, if you are a consumer facing business, this is absolutely something that you need to do. And interestingly, I found out about Chip through shareholders in Chip who'd invested via Crowdcube.
Alex is a huge advocate of this form of fundraising, and he's a huge advocate because he sees the data. Yeah. And that's the really important thing to remember. He's a CMO who's obsessed with customer acquisition cost and retention and propensity to refer. And because they've been such a shrewd operator with using this form of fundraising to power the business, now one of the Sunday Times fastest growing companies in the UK, he looks at the data and says, why wouldn't I want 100,000 shareholders when they're more valuable, they spend more, they refer more, they churn less, like give me more of them. And actually the change in the lifting of the prospectus limit under the POP regime is going to give more businesses like Chip and bigger businesses than Chip the opportunity to do what Chip have done and bring potentially hundreds of thousands of shareholders into a funding round with one line on the cap table.
Yeah. To the point on the data, we were talking about the value add between VCs and crowdfunding, and Alex essentially said that. He said, I'm sure VCs add a lot of value, but I've seen the data on crowdfunding, and we know how valuable it's been to our business. They're different forms of capital, right? And both come with their pros and cons for sure. But what we're seeing is progressive later stage founders are understanding that there's merits to both. And actually often you can combine the two things, which is really neat. Yeah, of course, right. And more and more late stage companies are seeking liquidity through secondaries. Being able to combine that with also customer acquisition and strengthening your customer base, I can really see the value there. Let's also talk about Pisces. So there's like another big, government proposal to kind of help unlock the capital markets and push things forward. What's your take on it? I saw that you kind of commented in the Sifted article. Can you give again, like maybe 30-second quick brief for those who don't know on what Pisces is and what you think the impact will be?
Yeah, so Pisces is a operating framework where market operators can effectively create an exchange which allows private companies to dip in and out of trading windows or trading events. I'm not an expert on Pisces, and it's difficult to ascertain exactly who's going to be a user of the product or a user of the market at this stage, because it's somewhat light on detail. We are, as an organization, we're very pro innovation in the financial markets and the capital markets, but we're also very pro financial inclusion. And at the moment, Pisces doesn't include retail investors, despite all of the regulatory frameworks already being in place for retail investors to invest in private companies, including the upcoming change with the POP regime. So we're trying to understand why that is and why they've chosen to exclude retail investors at this stage. We're also trying to understand, I think, as lots of people in the market are, who is the user of this exchange when it eventually goes live. There was an article I read this week about, Revolut and Octopus Energy, being interested in it. It seems strange to me that an organization like Revolut would be interested in Pisces when secondary liquidity doesn't appear to be an issue for them.
Yeah.
They've got every sovereign wealth fund on earth and every buyer of late stage secondaries on earth trying to acquire shares in the company. So trying to get our heads around who's the typical use case here.
Yeah, of course. Yeah, it feels like the government's working very hard to try and get lots and lots of companies interested, but it's very hard to see how many are going to take it up at the moment. But I think it could be an interesting development.
For sure. And to be clear, we're pro-growth. We are pro-innovation in the capital markets, and we're definitely pro-inclusion in the private markets. And there's elements of this which definitely lean into that. But, we think a little bit more detail is required before, founders in the UK really start to get their head around, okay, am I a user of this or am I not?
Yeah, okay. I also want to get your views on capital markets more generally in the UK. We've seen a lot of headlines about, Wise moving its primary listing to the US, some of the big tech companies in the UK being taken private by American companies, and of course, Monzo's looking potentially at a US IPO. What do you think could help open up the UK capital markets?
So it's a good question. I think what do we see happening, which we think is really positive? What we see happening at the moment is definitely a pro-growth agenda from all of the sort of interconnected regulators. That doesn't mean that they're kind of risk on where they used to be risk off, but they are understanding that regulation needs to support growth and innovation first and foremost. Otherwise, we're buggered. I think another thing which is really important, which I know is a key theme of groups like CMET, for instance, is we have to get UK investors investing in productive UK assets. And that means both access to public productive UK assets, but also access to private productive UK assets. And kind of whether you're a private company or a public company in the UK, if you're growing, you're a consumer of capital for sure. And if you're a consumer of capital, you should be a creator of value. And one can't happen without the other. So for us, this pro-growth agenda around regulatory reform is really important because I think it helps unlock that alongside other innovations like Pisces, like the POP regime, like continued support of public and private markets.
Yeah, and the UK has a really mature sort of like crowdfunding, ecosystem. I was just thinking it's interesting that we have a big appetite for private companies. We have a huge community of people in the UK here who like investing through Crowdcube into private companies, but we're not seeing that so much in the big public companies. That retail investors are almost more interested in the private companies than they are investing in FTSE 100 companies, which I think is interesting.
You could argue UK retail investors are more interested in investing in crypto than they are investing in UK public companies. And there's tons of people who've got roles to play in that, from the big capital allocators to the regulators and to the exchanges themselves. And there isn't a quick and easy fix, but lots is going on in the background to make the UK a more attractive place to build a business, grow a business, raise money for your business, and ultimately create value for UK PLC.
Yeah, absolutely, which is amazing. Matt, we're running out of time. I just wanted to ask one final question. Crowdcube had your latest financial results were really positive. Growth was up. You hit £10 million of revenue, profitability. It feels like the business is in a really good place. What's next, or what's on your kind of top priorities for the next 6 months or a year?
Yeah, so as you said, we've been profitable now for 12 months. We're growing really nicely. We've had a strong first half of this year, which is great. Where do we see opportunity, or where are we focusing or pushing our chips in? Probably a couple of areas. Like, we see really, really strong opportunity in the EU as we kind of expand our ability to work with companies and investors in the region. Interestingly, a report came across my desk this morning. Belgium's a real hotspot for us at the moment. We've raised millions and millions of euros for companies in Benelux over the last 6 months. So we keep expanding on these little pockets of startup ecosystems in the EU that suddenly are somewhat discovering our service for the first time, but then really maximizing the use of it, which is fantastic. And then a lot of the themes we've talked about today is a focus like this continuing expanded access to the later stage end of the private markets for retail investors is going to be huge for us. All of that value creation that used to happen post IPO is now sort of increasingly happening whilst the company is remaining private. And first and foremost, we don't want Crowdcube investors and retail investors in the UK and the EU to miss out on that big opportunity.
Yeah.
And we're staying pretty laser focused on our mission, which is to be the largest distributor of private market investments to retail investors in the UK and the EU. So that's what we're focused on. That's what I think we're executing on reasonably well. It's an exciting time with this convergence of public and private, and the public markets retrenching slightly and the private markets continuing to expand. We're right at the epicenter of that, which is cool.
No, absolutely. You've built the platform for the perfect time, it feels like. But I'm conscious we're out of time. So Matt, thank you so much for being on the show. It's an absolute pleasure to have you.
Awesome.